Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Sean Brodrick, editor of Wealth Megatrends and contributing analyst to Weiss Ratings Daily. And Sean, it's always great to get you on the show every couple of weeks just to get your thoughts on the commodity space, the resource sector, and sometimes we get into other sectors as well. But today, I think it'd be a shame if we didn't kick things off with the uranium sector. In general, in 2024, this year, uranium has been kind of in a consolidation mode. It peaked out earlier in the year in that January, early February timeframe to some scorching levels to the upside. But then it's kind of been consolidating, and a lot of people have been sending us emails, Sean, saying, "What's going on with the uranium? Are these things dead? Is the rally over?" And we were just talking off mic just a little bit that today's action looks encouraging, but in general, I think your longer term thesis is you're still a bull on the uranium sector.
Yeah, well, looking at, say, the three stocks that are leading our resource trader portfolio higher today, Cameco is up nearly 8%. Uranium Energy Corp is up about 7.5%. Energy Fuels is up 5.75%. It's a great move. What's fueling this? And one thing that I've come to terms with is announcements about new nuclear power plants or government subsidies and or new laws and stuff. None of that really moves the uranium price. But something did happen that threatens to move the uranium price today, which is Kazakhstan announced that it's raising the tax on uranium mining next year. And so what is going to happen is right now the effective tax is about 6%. It's going to jump to an average of 9% next year and 10.5% in 2026. But the thing is how they're doing it. The more uranium that a mine produces, the higher the rate goes. At the highest point, above 4,000 metric tons, a mine's production could be taxed at 18%. What this is a real incentive for Kazakhstan and its joint venture partners, because remember, a lot of the projects it has foreign companies working with it, whether it's Cameco, whether it's Orano, whoever, other companies are in there too. But the incentive is to produce just below the limit at which the tax would go up. And so that's effectively limiting how much uranium the mines in Kazakhstan are going to produce. Now, I can see why the government did this. This just brings it in line with the taxation system that they have for oil production in that country. However, it just goes to show whenever the government does anything, there's always unintended consequences. And the unintended consequence here is we won't see that country just turn open the taps of uranium, which has always been the threat. Remember, they cut back way back on their uranium production in the past, and they've kept it down at this level in order to support the uranium price. I don't see, and the market doesn't see them increasing production anytime in the next couple years because they'd have to pay a lot more taxes. The more they produce, the higher their tax rate goes. So it isn't just you pay more taxes, you pay a higher tax rate. The other thing this does is it discourages investments in new mines in Kazakhstan, which you probably know is the world's number one uranium producer. So this is what has sent uranium stocks just bolting higher today. We'll have to see how the week ends, but this could be the sea change that the very patient uranium investors have been waiting for a long, long time.
Yeah, Sean, and another factor with the Kazakh producers at Kazatomprom is that they have not been able to get enough of the acids they need for their in situ mining, unlike US ISR producers who mostly just use carbonated water. They use an acid in their ISR mining, and they haven't been able to get enough of it. And it's really crimped supply, but this new tax thing just adds a whole other layer onto it where it's going to limit their potential to really break out and play catch up unless they want to pay a lot higher taxes. So that's been a boon for uranium. I want to go back to something that you said though, right at the very beginning that the new nuclear build outs and the U.S. policy or other countries' policies on funding doesn't really have an immediate effect. But wouldn't you think it has kind of that longer term trend effect where over time more and more people are going to wake up to the reality that the demand side is only going to grow with more reactor builds and the supply side is only getting more crimped?
Yeah, that's a good point. But the problem is for uranium investors, is they're always talking about the long term. Meanwhile, those idiots over in artificial intelligence are just making reams of profits without really doing anything, you know? And so that attracts the money. It just makes the money flow into the AI stocks or whatever else you want to pick and not into the uranium stocks. So, absolutely, the long term picture for uranium is not only bullish, it grows more bullish by the month. We see news after news after news announced there is a big supply demand squeeze coming. However, the stocks have not been moving like anyone's really worried about that in the short term. In fact, they've really been going sideways, most of them. And so now we have something that actually could affect uranium production or perceived uranium production next year. One thing that had been whispered about was that they were going to get more acid next year. And so that might raise the production that way. That's pretty much off the table now. I mean, they don't want to increase their production in any meaningful way because that's going to increase their tax rate. What they can hope for, I mean, I'm not in their heads, I don't know, but just keep production where it is for a couple years, and then the government will keep nudging them to raise production, and they'll say, not until you change the tax regime first, you know? And so that's what it really could come down to. But in the short term, we aren't going to get any higher production out of them. And that's more bullish news in the short term for the Western uranium miners.
Well, and I think we've discussed this before, Sean, but in general, you've kind of steered clear away from some of the exploration plays because they're not sure if they even have uranium yet. And you've been focused on the production stories and the near-term production stories. Is that still how you're
Mm.
playing the sector?
Yeah. And it hasn't been bad at all. I mean, that's actually worked out quite well for us. All of our positions are in the green, and we don't just have uranium positions in Resource Trader. I have it in other portfolios as well, all depending which way we play it. So, yeah, I mean, just at this stage of the market, I don't think I need to really invest in explorers, especially explorers that are further out. Now, if they have some timeline to production or timeline to some important milestone, then I might buy them. Absolutely. But the way it is now, I'm avoiding 80% of any explorers just because I don't see the need to put any money to work in that space, not when these miners and developers are so darn cheap.
Well, just one more cross-pollination question here. We were talking a little bit off mic about the lithium sector and how the lithium prices have pulled back, and so have most of the lithium stocks for some time now after having a pretty big run. But I think a lot of people got overly excited in the lithium sector, and there's just so much supply coming online. In contrast to that, when you look at uranium, there's still a pretty big growth trajectory for the demand side, but there isn't the ability to bring supply on as quickly as something, let's say, lithium. So do you think that kind of puts uranium in a different camp than something like lithium, where it's not just a flash in the pan, but it has some staying power?
Oh, yeah, yeah. I mean, again, we are going to see more lithium production come online. And in fact, we only own one lithium stock, Lithium Americas Argentina, and that's going to crank up its lithium production. You know, it's still down a lot. We are underwater on that position. Maybe it'll improve. I don't know. But you also have companies like Exxon moving into lithium production. It's going to be very hard for most producers to compete with Exxon on any kind of economies of scale, right? I mean, just looking at it, Exxon's one of the biggest companies in the world. They can afford to throw all kinds of money and technology at any extraction they do. So they're probably going to get things pretty cheap. So I do worry about the smaller lithium producers. We've always said about lithium, it's not rare, it's just rare in economical amounts to mine. And the lower the price of lithium goes, you know, a lot of these projects don't make sense. So we'll have to see how it goes. I still believe in the EV boom. That's had kind of a setback this year, but you know, nothing goes in a straight line. I think we'll see more electric vehicles going forward. There'll be more lithium demand for all sorts of batteries and all sorts of things. It's just going to be huge. But in the short term, you know, it really does not look bullish in that sector. That's completely opposite from uranium. I mean, the longer term picture for uranium is what was always strong. And now we have a good short term case for uranium as well. But then the price of uranium was way up anyway. You know, I mean, many of these uranium miners make a whole heck of a lot of sense at current prices. If the price of uranium starts to go higher, they're going to be even more attractive. You can't say the same about lithium right now. It's just higher lithium prices really aren't in the cards.
Yeah, I think some great points there, and it's just going to be interesting to follow both markets. But I'd also like to just pivot over to traditional legacy energy, things like oil and nat gas. Oil has been holding its own above 80, and nat gas has been volatile as it always is. But how are you looking at things like the oil and gas stocks and the energy sector in general?
Yeah, well, I look at those as two different markets, and we've taken some oil stock gains in the past month. Just because things seem like hit a certain point, might as well grab some gains. We have some natural gas stocks. Some are above water, some are underwater. Neither one much either way because we bought them near the bottom. However, the U.S. Energy Information Administration forecast yesterday that prices for natural gas will surge by a third over the second half of this year. So that looks good for natural gas. It's really a supply thing because the big natural gas producers are just trying not to produce as much, and so we'll have less supply. I still like oil. I think oil looks great. And at these prices, I mean, you should be invested in oil companies that make money at these prices. That's what I'm doing, that make a lot of money at these prices. At current prices, I mean, some of these oil companies are cash cows. They really are. The market may be a little bored with them right now. They may be coming down in price, but they'll pick up as earning time comes around and stuff like that. And many of them pay those sweet, sweet dividends. Boy, don't we like those, right? So, I mean, those are the things I like. Now, I also have stocks that are in, say, the more technical aspect of it. They're out there actually doing the work of like drilling holes, stuff like that, doing pipelines. So they aren't oil producers per se, but they all have leverage to the price of oil. And I do think that the price of oil will zigzag higher. We have about the only bearish thing I've seen lately is we've seen lower gasoline demand in the US. I'm not sure what that's about because, things seem to be humming along pretty well otherwise in the economy. I just saw GDP now forecast for the US. It's up, oh, I don't know, something like they're now expecting 2% growth in the quarter. The only components of that were in negative territory were residential investment. Housing prices are actually under pressure now, and also net exports. That's about it. So, the economy seems to be growing along pretty okay. We've had higher job growth. We have seen unemployment inch up. That's absolutely true. We have, but not in any meaningful way. Now, maybe they're undercounting the amount of people employed in the economy. Maybe they're overestimating the employment rate. There could be a lot of things that are different, but when you see things like over the 4th of July weekend, we had the highest amount of air travel ever. It's not like people seem to be, you know, pinching their wallets right now. It seems like people seem to have plenty of money, or even though they complain bitterly about higher prices. I know I'm one of the people who complains about higher prices. I don't blame anyone for doing that, but it seems like people are generally doing okay. And so, you know, I don't expect a global recession this year. I think that any pullback in oil based on that is a buying opportunity. I do think we will see higher oil prices as the global economy continues to chug along, and there is a limited supply because of actions by OPEC Plus and stuff like that.
Yeah, it's hard to know with all the government reports exactly how those numbers are reflecting reality because of the way that they are reported or what they choose to report or what they choose not to report. But in
Right.
general, I think you make a good point. People seem to be traveling. They seem to be out there spending money, and it doesn't seem like the recession that was maybe the most advertised recession of all time never came so far. So it does seem like the economy is holding up. And any way you slice it, good economy or bad economy, there's still going to be big demands on energy. So we've talked a little bit about uranium, we've talked about oil and gas and lithium. I know that for a while you were following the renewable sector, and boy, that sector has been beat up, Sean. If you look at things like solar or wind, if I just look at the ETFs, TAN for solar or FAN for wind, they are just beat down into the dirt here. Do you think that the energy transition narrative has changed, maybe a less of a focus on solar and wind, or how do you look at the renewable sector now?
Well, certainly some wind has gone out of its sails to make a wind pun there. The only way that I'm playing it right now is through utilities. There are utilities that are doing a lot of green energy, but I'm not in those utilities for that. I'm in those utilities because they happen to be operating in parts of the country where these big data centers are being built for AI. And they are seeing an actual measurable increase in the amount of electricity demand on their systems from these AI data centers, and there's more data centers being built. So the amount of electricity they're supplying to customers is going up. At least part of that electricity will be green power. We've seen wind eclipse coal recently. I saw a nice chart on that. Certainly, there's plenty of solar being built and stuff like that. These things aren't dead, but you have to just choose how to play it from, like, say, companies that make like panels. There seems to be a real surplus of those right now. I mean, they cranked up production in China and like stuff like that. You can get solar panels dirt cheap, which is great for the utilities because the price of actually producing power from the sun is going way down. I don't know much about the wind thing, but they seem to be also producing more wind electricity too. So there are opportunities there, not the heady stuff everybody was all charged up about before, but you can still play it. It's just, it doesn't really have the excitement that other sectors of the economy have right now.
And it's an interesting thought to play it through the utilities versus the actual solar or wind companies because they're actually getting a better cost of power as the supply of the solar panels has gone up. So, not as good for solar companies, but great for utility companies. All of this kind of ties in this electricity and this energy transition narrative to copper. And anyway, you slice it, we're going to need a lot more copper just for the wiring, just to transmit the electricity. Do you have any thoughts on the recent pullback we've seen in copper and some of the copper miners? Is it a buying opportunity?
Well, funny you should mention that because I don't know if you're reading my resource trader issue that just went out on Tuesday, but I am quite bullish on copper. In fact, I have a new pick for my subscribers that I'm probably sending out next week. There aren't a lot of copper producers, but ones like, say, Freeport McMoran, for example, they are really leveraged to the price of copper. On the other hand, you have greater geopolitical risk with a stock like that and stuff like that. So you have to be very careful. There are other ways to play it as well, but I like copper here. I do. I do think the price is going higher. What would derail that is if we have a global recession or a China recession. Either one of those could derail that, but I don't see that right now. And so, yeah, I am bullish on copper.
One more, I guess, that we can throw into the energy discussion is there's a lot of these niche metals, things like vanadium for vanadium redox batteries or, different specialty metals. But people make a big point that rare earths are important for the magnets, they're important for technology, they're important for electric vehicles. Do you have any thoughts on the rare earths market?
One of my colleagues really likes rare earths. I don't because they're not rare. China has kind of a monopoly on it right now, but we are seeing new rare earth mines being built in Africa as we speak. Within the next couple of years, they'll be producing, and that's a huge game changer. Suddenly China won't be able to dictate prices and stuff like that. So I'm not actually playing in that space right now. I have enough on my plate as it is. I don't see the opportunities there that I see elsewhere. Now, there certainly could be. And it's true, there's a lot of things you can't make without rare earths. It's just that how am I going to play it as an investor? I don't really see the opportunities right now.
All right. Well, then just to summarize things, Sean, out of all the things we've talked about, uranium, oil, nat gas, lithium, copper, renewables, solar, wind, utility companies, which one are you most bullish about, let's say, for the next couple months?
Well, you'd have to ask me at the end of this week because if the uranium rally that we're seeing today can hold up through the end of the week, then it's definitely going to be uranium. If not that, then probably silver. I think gold and silver are poised for a big move here, a big move. I just see more bullishness coming into that sector. I'm looking for those companies that are going to increase production and either keep their costs flat or even lower them because of the increased production. And there are some real opportunities there as well. But if uranium can hold this rally through the end of the week, then that's going to be my top pick probably for the rest of the year.
All right. Well, we'll wrap it up there and we'll keep tabs on how things go for the balance of this week. But some exciting things going on in the commodity space, and in particular, we covered the energy space. But you wove in the precious metals there at the end, Sean, and yeah, definitely some nice moves in gold and silver too. So we'll maybe check in with you on the precious metals market and take a deeper dive next time we talk. And if people like getting Sean's thoughts, definitely click on the links below this interview. It takes you over to his Wealth Megatrend site over at Weiss Ratings, but also the Resource Trader that he referenced is a publication where Sean discusses a lot of the mining stocks that we talk about on this show. So definitely click on both links to follow along with Sean. And Sean, looking forward to our next conversation.
Always a real pleasure. Thanks, Shad.